All right, here we go, everybody. Welcome to another live stream. It's me, Smart Silver Stacker, and we have got just a lot to delve into in today's broadcast. The end game that we're facing here is really not going to be pretty. We are on the verge of a major economic crisis. We have got war heating up around the world. Food inflation is through the roof, and it's no surprise that we see the price of Bitcoin taking off today. Of course, gold and silver is still very cheap, but let's talk briefly about Bitcoin. So we're in the midst of another one of these big Bitcoin rallies. Bitcoin, of course, known for its volatility. This is the long-term chart of Bitcoin, the granddaddy of all cryptocurrencies. And first comment I see there, someone saying silver is trash, Bitcoin to the moon. Well, yes, that's exactly the type of sentiment that we are witnessing right now. Now, how high could Bitcoin go? Well, if you look at previous moves on the Bitcoin chart, you can see we had this first move here in 2017. That was coming from around the $1,000 level, and then it went up to almost 20K. I think it did briefly touch over 20K. Had that come back down to about 3,000 at the bottom, that rallied all the way up to over 60,000. So what is that? That's like a 20x move. Then we had the price come down to about 30K, up to almost 70, almost touching 70. So that's a doubling. Now we're coming off right now this level of about 15,000. So, how high could it go from here? Well, a lot higher than it is right now, certainly. I don't think we've touched the top of this Bitcoin rally. But the thing with Bitcoin is you never really know when it hits its top. I would say if we're coming off of 15, 16,000, what do you think? Put a price target in the chat. I'm thinking maybe we might get a little shy around 100K just because of the psychological importance of that number. If it does blow through it, who knows? Could go up to 150,000. Vince in the chat here saying Bitcoin tends to crash just as fast as it goes up 100%. That is also true. Now, I want you to think about the sentiment, though. What were people saying about Bitcoin down here around 15, 16,000? Was everybody all fired up about Bitcoin? Certainly, you have some of the devotee hodlers, but there were a lot of people, I think, who bought up at the highs in 2021 around $60,000, $70,000 who around this point were getting pretty sour. People were not super excited about Bitcoin. Now, some people were smart enough to buy some there. Congratulations if you did. You've turned a nice profit. Of course, you never really profit until you sell the stuff, but you're significantly in the green if you've been holding from that point. But the point is that, the time to buy this stuff is not when everybody is piling into it. I mean, I would be a little hesitant to buy at this level. I feel like it's due for a bit of a pullback, maybe not a crash, but at least a pullback, because this move up that we've seen has been so steep, as you can see on the chart here. But, I just want to consider what the sentiment for Bitcoin was like when it was down at the lows. A lot of people were talking very poorly about Bitcoin. And when that happens, that's the time to buy. And as that individual AT in the chat here said, silver is trash, Bitcoin to the moon. Well, when you start hearing that, that's probably the time to take a look at silver. Today's video sponsored by SD Bullion. That's where I buy my gold and silver. And look at the sales on silver right now. You can see the premiums are way down. You remember last March when the banks were failing, premiums were sky high, took forever to get an order. Right now, premiums are very low. I would imagine that, stackers may even be selling into the market. That's why dealers such as SD Bullion are having to drop their premium, try to entice buyers into the marketplace. That is the time when you want to buy, when the sentiment is low. Like right now, silver $0.50, $1.99 over spot. Junk silver, we've talked about this many times before on the channel, is a bit of a canary in the coal mine for where the market is going. It's the thing where the supply dries up the fastest when people are piling in. So when you see the premiums on that stuff come down, it's probably a good time to take a serious look. I mean, I can recall before the banking crisis of 2023 in March, I had made a video maybe a week or two before that about how premiums on junk silver had come down because they had been coming down from another period of tightness and high premiums. And then just 2 weeks later, junk silver was selling for, in some cases, 60, 70% over spot. So look, now's the time to be getting into precious metals, I think, and, might be a good time to take some profits on your Bitcoin position, even if you plan to re-enter that. Of course, none of this is financial advice. I am just telling you my thoughts. Now, a lot of people want to talk about silver like it just languishes. It only goes down. Of course, this is a 5-year chart here on Google Finance. You can see over the past 5-year period, silver is up 48%. That's not bad. And some of the moves that silver makes, like this one from in 2020, we had that crazy low, $12.39 an ounce. That ran up to almost $29 in 2021 there. That was the whole silver squeeze thing. Or I'm sorry, that was in 2020. But that was around the time that we had the silver squeeze. We had that big run up in silver. And look, at the peak of silver there, around $29 or so. I think the silver squeeze is actually right around here if I'm getting my dates right. But anyway, around $29, everybody was piling into silver. There was all this enthusiasm about it. You can remember the silver squeeze. Well, it turns out that was actually near the top. Here we've got a comment from someone in the chat, and I think this sums it up pretty well. When everyone is making fun of you for buying Bitcoin, that's precisely when you should consider going in. When your grandmother asks you about crypto, go ahead and use it to... I can't read this word because of my setup here, but to get some precious metal. Yeah, absolutely. 100%, I couldn't agree more with that comment. And right now, everybody's talking about Bitcoin. If you buy silver right now, though, people are going to think you've got a tinfoil hat on. You'll, be lampooned. I see it in the comments here. I can tell you that based on what I hear from my audience, there's a lot of naysayers out there right now around the precious metals. And, that's exactly when you want to be buying. Now, let's get into some of the collapse news and the collapse update because, there's a lot of factors right now that are probably ultimately going to drive Bitcoin much higher. They're going to drive gold and silver much higher. Any of the alternatives to fiat debt-based currencies are going to be really doing really well moving forward. First of all, I want to address this. The Federal Reserve has announced the ending of the Bank Term Funding Program. That's going to be ending on March 11th. And there's a lot of stuff going around on the internet right now, videos on YouTube, talk on the interwebs about this date, March 11th. Oh, this is going to be a big date. Not very likely that this actually will be the date. If it was, it would already be priced in. People would be getting prepared for it. You're not going to know ahead of time what the exact date is going to be when this crisis plays out. But it isn't good for the regional banks that the Bank Term Funding Program is going away. It's one more lifeline that they're not going to have. And you can see, this is an emergency lending facility for regional banks created during the financial crisis of 2023 when the banks were failing. Initially, it got used quite a bit in the first month. Then it was kind of flat for a while. But then you can see from November of last year to today, it ballooned from around $110 billion to 164. So that's a significant amount of utilization up until this point, and this facility will be gone. So that does mean that when the crisis rears its head, it's one less crutch the banks will be able to rely on, and they're going to need a lot of help from the Federal Reserve once this really begins to play out. The Bank Term Funding Program is going to be a drop in the bucket compared to the amount of printing, quantitative easing, and easy money that is around the corner. Now, let's talk about why we can almost certainly guarantee that. Before I do, I just wanted to note something here. You see this ad here? I don't know. We have these no alcohol challenge ads that I've seen popping up on Zero Hedge and other sites. I don't know why they're targeting me. Maybe they're trying to tell me something. I don't think I have a problem. But look at this ad. Look at this woman's hand. This is obviously an AI generated image. You're going to see more and more of this stuff as this stuff gets better and better. I just noticed this earlier today. I thought this was interesting. She's got these deformed fingers. Pretty sure this is all AI generated, but that's just a quick aside. Now let's talk about this headline from Bloomberg. Distress in CRE CLO loans surged 480% in the last year, report says. Yeah, there is a banking crisis right around the corner, folks. So let's read a little bit about this. About 8.6% of commercial real estate loans bundled into collateralized loan obligations. Does this sound familiar? Does this remind you of anything? Maybe of the 2008 Great Financial Crisis? Anyway, These were distressed by one measure in January, a huge surge over the prior year's proportion after borrowing costs surged, according to a report by analytics firm CredIQ. The distress rate is now 480% higher than in February of last year. So year over year, 480% increase in distressed commercial real estate loans that regional banks have a lot of exposure to. I feel like people forget, but this is the chart for New York Community Bank Corp. I mean, this is a bank that share price got more than cut in half just weeks ago because of losses on its commercial real estate portfolio. I feel like people maybe are forgetting about this, but this is not recovered. And there's going to be a lot more of these as we move forward because of these distressed loans. So the borrowers typically use the debt to buy multifamily complexes, intending to renovate them and flip them at a profit. Again, does this sound reminiscent of anything to you? Maybe 2007, 2008, or perhaps the lead up to it? But many are now struggling with their floating rate loans and after interest rates increased. Yeah, so if you have a variable rate loan and the interest rate goes up on that, the cost to service that can increase. And when you're coming under pressure from a variety of factors, as it states here, that can become very difficult to service. Multifamily debtors have also been struggling in some markets with rising insurance costs, that's inflation, falling values, and increasing competition after investors piled into the market when rents spiked during the pandemic. So this is like a stagflationary result. You have inflation, which is putting pressure on these debtors. They're having to pay more for insurance. Why do they have to do that? Well, the cost to insure things moves up because the cost to replace things moves up. Materials are more expensive, labor is more expensive, so got to pay more for insurance. Values are falling. That's because the Federal Reserve has cranked up interest rates. The cost to borrow has gone higher. That, by default, removes some potential buyers from the pool of buyers for these commercial properties. The valuations of these commercial properties in most cases is well below what it actually says on these loans. If the banks had to mark to market the value of these commercial real estate properties, the collateral that backs up these loans, it would be over tomorrow. And also increased competition after investors piled into the markets when rents spiked during the pandemic. So distortions due to economic manipulation by the Fed, malinvestment, bubbles being inflated, investors rushing after easy money. That's what you get when you have a centrally planned economy and you have all of this money printing and attempts to micromanage the economy by the Federal Reserve and the can kicking of the crises. Well, eventually they begin to rear their heads in things like 480% increase in distressed loans. And as we move forward, inflation is going to continue to move higher. The Fed seems to be, for the time being at least, content to leave rates where they are. But I'm telling you, when this crisis really hits the regional banks, and that could happen at any time, the Fed is going to be cutting interest rates in a very big way. Now, we just got this today. U.S. economy grew 3.2% in fourth quarter. That's a slight downgrade from government's initial estimate. So U.S. GDP moving up, rah, the greatest economy of all time. You're going to hear this in the mainstream media, solid growth in the U.S. economy. But, look at this. Let's just examine the debt to the penny site here from the U.S. Treasury. So starting September 1st, total public debt, $32.841 trillion. Now, if we move it forward to the end of Q4, we have the national debt finishing up the year at $34.001 trillion. Now, if you do the math, that's an increase in the debt of 3.5%. So, you got a 3.2% increase in GDP, a 3.5% increase in the national debt. Where do you think that GDP increase came from? It's the result of massive borrowing, massive deficit spending. It's not a sign of real economic growth. It's just a sign of money being borrowed from the future and poured into the now. The only thing ultimately that this guarantees is a devaluation of the dollar and a massive U.S. debt that will ultimately have to be financed by the Federal Reserve's printing press. They're going to monetize all of that debt. It's the only option moving forward, unless they want to crash the entire economy, which I don't think they're going to want to do, especially not in an election year. But you let me know what you think about that. Is a 3.5% increase in one quarter in the national debt worth a 3.2% increase in the GDP? It doesn't sound like we're getting a very good ROI on that to me, but let me know what you think in the chat there and in the comments if you're watching this later. Now, we just heard from the Wall Street Journal that food spending share of disposable income has risen to a 30-year high. You have to go back to 1994 to find a time when Americans were spending this share of disposable income on food. So massive food inflation is out there. We covered yesterday, this was interesting, the surge pricing that Wendy's is apparently considering. We talked about this in yesterday's live stream, how they were talking about putting these like smart boards in their locations and pricing their burgers in real time via an algorithm. And yeah, I get it. It's frightening and it's dystopian. Well, now they say that they're not going to do this because they had this massive backlash. And, I saw the backlash against this in the comments of yesterday's live stream. A lot of people seem to think that Wendy's was planning to do this out of corporate greed or like Wendy's is out to get you. I assure you that's not the case. You're blaming the wrong party here. Wendy's is a business that is trying to deliver a product to customers and earn a profit in a competitive marketplace. That's it. There's no evil agenda there. I mean, if you mean that it's evil that they try to turn a profit as a business, well, I'm guessing you've probably never had a business yourself because guess what? If you don't do that, then you shut down and nobody gets a hamburger. But, who's at fault here is the government for printing all the money, for monetizing all the debt, for driving cost of everything through the roof. This is like an innovative solution that Wendy's was trying to implement. And guess what we're going to get instead of surge pricing because of the, PR backlash? They're just going to raise prices. They're not going to do it on a smart board, but they'll just do it on the regular menu. Oh, the price is now higher because they have to, because they're going to have to pass those higher costs on to consumers. It's just the economic reality. For those of you who blame businesses for inflation, I mean, you are in the Joe Biden camp of economics. You're a good student of Bidenomics because that's exactly what he told us during his Super Bowl ad, that shrinkflation is greedy businesses' fault. No, Joe, it's not. Now, it's not your fault alone either. I mean, it's a long succession of U.S. presidents and politicians who have raised the national debt to an absurd level. You just happen to be at the helm during a particularly bad bout of it. I'm not, giving the guy a pass. Certainly he's done his share. He's been in the political establishment for, quite some time, and I'm sure he's voted for a lot of bills that, have driven the U.S. national debt, have driven the debt monetization by the Federal Reserve. All of these policies are to blame for the rising costs. But for everybody who thinks that, you can just point the finger at Wendy's or point the finger at Biden and say, you're responsible for inflation, you're getting it wrong. It is the entirety of our planned debt-based fiat monetary system that is to blame for the skyrocketing cost of food. But somebody who really doesn't get it when it comes to inflation is the Kellogg's CEO. Now, he's facing a bit of a backlash because he suggested that Americans struggling with rising food costs should just have cereal for dinner. Oh, what a great idea. We can all get diabetes while we suffer from inflation by eating frosted, sugar pops for dinner. I don't know what cereals are out there these days. I don't eat the stuff. I think it's poison. But he says the cereal category has always been quite affordable, and it tends to be a great destination when consumers are under pressure. Thanks, Kellogg's CEO. If you think about the cost of cereal for a family versus what they might otherwise do, that's going to be much more affordable. I guess that the insurance will cover the insulin needed to deal with the sugary poison. But, I mean, seriously, it says he's being rebranded tone deaf. I mean, do you think? This is truly a let them eat cake moment. But, yeah, you're probably going to be eating cereal for dinner the way things are going. Unless, of course, you've managed to put away some hard assets to keep up with inflation, or if you've got some food put away, that's always a good thing to do too. And I don't mean put away cereal, put away some high calorically dense, healthy, nutritious food, some freeze-dried meats, maybe some freeze-dried vegetables, large amounts of rice and beans, that kind of stuff, because that'll keep you alive and kicking a lot better than sugary cereal will. But this is the kind of solution that we're being given here by the people running the businesses, running corporations. So thanks to the Kellogg CEO. I think I'll fast rather than eat sugary cereal for dinner, but that's a great idea. And, as if we didn't need any other contributors to the massive amount of inflation that we are going to be facing, you've got rocket fire now reported off Yemen in the Red Sea and a new suspected attack by Houthi rebels. So the attacks there continue. This is inflationary in so many ways that it is just painful to observe. On the one hand, shipping is disrupted. That right off the bat will lead to supply chain disruptions, higher cost to ship things, higher cost to insure shipments. All of that will get passed on to the consumer ultimately. So expect to pay more for everything that gets imported into this country, which is most things that are manufactured. Also, we likely will continue dropping hundreds of millions or billions of dollars worth of munitions on positions in Yemen. That's what we've been told. What did the president say a couple weeks ago? He said, are the airstrikes working? No. But will they continue? Yes. So thank you for that brilliant leadership for, you can't make this stuff up. It's just crazy. But we're going to keep pouring billions of dollars into this Middle East conflict, and that ultimately will all have to be monetized because it's all debt. We don't have a war chest to go after these people. It's probably why the price of crude oil remains elevated at $78.29. That will likely contribute to higher inflation moving forward as the Middle East continues to be destabilized. I would expect the price of crude oil to continue to rise regardless of how bad the economic slowdown gets. If we go to a war with Iran, all bets are off. The Strait of Hormuz will get shut down. Price of crude oil will probably double overnight. And that's when you're really going to see a lot of economic issues. The Fed is going to have a real handful with that one when the economy is collapsing due to skyrocketing energy prices. And the only thing that they can do to stimulate it is print more money, which will simply exacerbate the ultimate inflation. You can see how the end game here is looking pretty grim. And people might consider that doom and gloom, but you have to understand that when you have $34 trillion in debt and you have more than $200 trillion in unfunded liabilities, there's really no good outcome, right? It's just a matter of how long you can keep the whole thing together before you have a massive inflationary economic collapse. And that's exactly what we're headed towards. Will Bitcoin prove to be a safe haven in that event? Well, maybe. The price will probably go up. The price of everything is going to go up. Will it turn out to be the real safe haven asset? Will it just be gold and silver? I don't know. There's a couple ways that could play out. Maybe we'll move to a totally digital economy and gold and silver will simply be like analog backups to Bitcoin. I'm not sure that I'm entirely sold on that yet, but I will say that, Bitcoin has proven to be remarkably resilient. I will say when I first saw it spike up back in 2017, 2018, I thought it would be more like a tulip mania, but I'll tell you what, tulips went up once. They didn't go up and then come down and then go up and then come down. Bitcoin is probably here to stay, and I think probably it's going to be heading a lot higher. We might see some volatility. If it does crash, I'll probably consider loading up on some more of it myself. I've had a small position in Bitcoin for a while. I guess I'm glad I have that. I'm not selling it now at the top or anything. It's just kind of there. I view it like a lottery ticket. But it could be moving much higher, but it might not also. If we get this massive inflationary economic collapse, people might fly into real tangible assets. Gold and silver are the only safe haven assets that have withstood that kind of crisis time and time again over the course of many millennia. So I don't know. We're going to see how it plays out. I'm sure that all of you probably have a very strong opinion about it. Everybody seems to know exactly what's going to happen with Bitcoin moving forward. So feel free to leave a comment down below to let me know what you think, where it is headed. And then finally, you've got President Macron over in France talking about putting NATO troops in Western Ukraine. Yeah, moving them in. I talked about this several weeks ago about how there was a real possibility of this. Now it's looking like we're getting closer to it. We will do whatever it takes to ensure that Russia cannot win this war. That's his direct quote. A European military source, this is from, who is this from? This is from AFP, European military source says that European allies had been studying the plan for several weeks, and the United States supported the idea. Now, right now, you're seeing a lot of damage control. There's a lot of headlines out there, people saying, oh, no, we wouldn't consider this, we're not putting troops, because people are rightly freaking out. This takes us closer to a nuclear World War III. But I would not be surprised if in the weeks and months ahead, we see NATO troops deployed to Western Ukraine. That's ominous on many levels. That means we're going to get more deeply embroiled in this war than we already are. Forget the hundreds of billions of dollars in aid we've already committed. We're talking trillions if this turns into a real World War III, nuclear or otherwise, even a conventional war. If they manage to keep it conventional, boy, what a dream for the military-industrial complex that would be, right? Imagine avoiding nuclear holocaust, but having trillions of dollars of printed money pumped into arms contractors at the same time. A lot of people will get very rich from that, but not you and me. No, all that'll happen to us, well, hey, we might get rich in dollar terms. It might be a lot of millionaires coming around, but the problem is that, a loaf of bread might be thousands of dollars, as the old analogy goes. So, yeah, you've got, to sum it up, speculation in Bitcoin topping a new all-time high. Clearly, people are being disillusioned with the fiat monetary system. Will some of that money begin flowing into gold and silver? It's very possible, especially if we do see the bubble in Bitcoin pop, as we've seen time and time again. Bitcoin, again, is a volatile asset. It crashes, it moves back up. I'm convinced it is here to stay. I'm not convinced that this will be a sustainable move higher. I mean, the move could go a lot higher. Who knows? I don't have any way to forecast that. I would say 100,000 seems like a good target for Bitcoin at this point. But I do suspect that once it tops out there, we could very well see another plummeting crash in the price of Bitcoin. That's what's happened previously. Maybe that's not what'll happen. A banking crisis is around the corner. Trillions of dollars are going to be printed for a variety of purposes, whether it be to sustain government entitlements, whether it be to bail out the banks, whether it be for World War III. They're going to print the heck out of the dollar. Silver is just ridiculously cheap right now. Contrary to what many people tell you, it does move sometimes, as you can see. 5 years, silver has gone up 48%. That ain't bad, but that's just, peanuts compared to the moves that I believe we will see in it. And, as all of this plays out, it's going to be a really good thing, I think, to have some hard, physical, tangible assets in your possession. Yes, Bitcoin is good. Gold and silver also very good. The difference is this. If the internet goes down, if the grid goes down, your Bitcoin's not going to do anything. On the other hand, if you need to flee the country, it's going to be pretty hard to carry several pounds of silver with you, whereas you can write down a Bitcoin phrase on a piece of paper, memorize it, burn the paper, and take your money with you wherever you want. So, maybe have both. Maybe look for a pullback in the price of Bitcoin to get some exposure there. Anyway, that's it for today's live stream, everybody. I do appreciate you sticking with me through this one. I know it was kind of long, but there's just a lot to cover. And I will catch you next time. Stay safe, everybody. Smash that like button, share the video.